Hi everybody, welcome in. This is Michael with Viral Funding Solutions. In this video, I will go over the new SBA Bolt loan. This fast SBA loan you can get literally within 2 weeks, 7 days, or 10 to 14 days, more or less, without collateral. No profitability is fine. You could be reporting a loss, even a positive. Not proper cash flow, and a few other things. This is very cool. This is something that a lot of people are jumping on top of, and very rightfully so, because it's hit the market very heavily and fast. And I'm going to detail some of these qualifications and requirements and what you should know before you get started with an application if you can or can't get approved. And I'll show you some alternatives as well, like 0% interest for 6 to 18 months and up to $150,000, if not $250,000 in the form of business credit cards. You can liquidate the cash out of these. We can stack on top of one another, take the cash out of them, and use them for any investments. Other alternatives as well in the revenue space, credit space, collateral, and even in business credit. But before I do, these are the 3 things that I normally go through with every client, and this will determine on what we can work on now to optimize as well as in the future. And if you have none of these, I'll reveal one to get started with as a startup and even as a non-startup. You either have the credit, the cash flow, or the collateral. One of these 3, 2 of them, or all 3. And I look at maximizing the one that has your best potential right now as well as what it could be in the future. And if none of that, we work on building business credit through trade credit, vendor credit, fleet credit, store credit. There's many more. And we can do installments. And then there's also revolving. We can add the 2 together eventually, if not simultaneously. So there are many options available. I have my screen here that I'm going to look through on my laptop. I have this stuff already by memory. I really don't need to look at, but I do not want to miss anything. So I have this document, and I did a live yesterday revealing this SBA Bolt loan, a 7A alternative, or exactly a 7A, but it's a lower amount. And then there are higher SBA 7A loans past $150,000. So here again, without collateral, without profitability, and without proper cash flow, and the most up-to-date options, again, that video you guys can check out on my YouTube channel. I did a live over an hour worth, and I don't think you guys get this kind of valuable information from everywhere and anywhere. So be very cautious, again, who you hear from. Be very careful. It's not always about what they say, but how they say it. And you want transparency. You want somebody who will be loyal. I'm introverted by nature, so I'm a very cerebral person, mathematical and system oriented. I run multiple businesses in the digital marketing agency / lead generation, affiliate marketing in the health space, and a few other verticals, other ventures. And then this is my primary focus as a business loan broker, business funding expert. So let me get into what this entails. But this document that I'm looking at right now will show you all of the best and what I prefer and what I know to be working best for most people for the SBA lender and lenders. So here I'm going to go ahead and scroll down to the bottom. You'll see multiple options if you see this document, and if not, I'll give it to you in a questionnaire whether you can or can't qualify. At least you can see it for yourself and not feel like, well, this guy didn't show me, or there has to be something out there that I can get without any kind of proven revenue. I could just say I have this stated income and get approved for. And yeah, there are some things like that, but it's very difficult to get approved for. And even when they say stated revenue, like up to 25,000 or whatever it is, they'll still require 3 months of bank statements, 3 months of personal and or business bank statements, and a few other documents. A lot of the times you see that. Some of them maybe not, but for the majority of them, and in this market especially. So let me scroll down here and get to the exact service. One moment. So here I detailed for a quick micro loan from $25,000 to $150,000 within, like I said, 7 days, or it could be 10 to 14 days within a couple of weeks. And I'll get into some of the things with prime rates and an additional on top of that in a second. But there are different SBA loan solutions past $150,000. You see some from 25 to 150, 25 to about 350,000, give or take. And then you have everything above that, and then somewhere around 200 to 5 million on some of these added with these quicker funding options within 2 weeks, and then there's also the SBA 7A standard loans that can take 1 to 4 months to fund. And so it just depends on the situation. I won't speak about different ones right now, but just know that those are available, and we can do an in-house look, and that's what is preferred in this market. A lot of you trying to go to SBA.gov or similar and see if you can find a preferred lender. I've been there, done that, and I wouldn't recommend that because you may not find a preferred lender. You may, but you don't know for sure who they are, what they can do, what their results are. It can be harder to determine. And even when you see those results, it's still questionable. And you wonder if the efficiency of underwriting is really there with these fintech companies now, things that are evolving. Do they have the right credit committee? Do they really understand my needs? Because you can go to a bank and ask for an SBA 7A loan if you qualify, that's for sure. And you know the qualifications, and I'll go through some of these here. And they don't still give you the best amount. They don't give you max funding because they don't really understand you're trying to build a lot and you're trying to get commercial real estate to then build this into a gas station. And even if you're a startup, they can still look at things, but they still won't normally understand. They're not equipped, let's say, for that specific industry and for most of them. So it's best that you go to an expert and somebody you can consult with. And I know all the best lenders out there. I've worked with them, and I'm constantly every single day in communication with lenders. And so here you can get an in-house approach, I was going to say in-team because that's all the word, and a team of experts with myself and my team. And these are ideal for borrowers who have good personal and business credit scores. Now, I know a lot of you here are going to drop like flies and go, okay, just tell me what's the credit score. I'll get into that in a second, but good personal and business credit scores. And yes, there are alternatives that are not SBA, that are not creative credit-based financing if you don't qualify because of credit. We can do revenue, we can do collateral. Right now I'm working out on a cash out refinance. I'm working on existing mortgages, and I'm trying to help people get there. If they don't want to give up their title or do it in a different way, we could do a cash out refinance or something similar. But there's so many loan scenarios that I can look at, and I do a lot of real estate financing as well. And so here I kind of just detail liquid business credit. This is your FICO SBSS score. This is something that you could see. You may not see. It's depending on how the lender also evaluates this because they have their own scoring models. But I always recommend you guys check your business credit. A lot of you don't monitor it. A lot of you haven't established it. But the FICO SBSS score here is about 175 that they're looking for. I know that's quite deep. If you've heard of SBSS scores, that normally with an SBA you see around 150, if not 155, more or less, sometimes 140, 145, give or take, it could be less. But the standard normally is 155, 150, around that range. But with the Bolt loan here, it is 175. And if anything were to change, you guys would know about it. And I don't want to get too deep into the business credit and how to build all this right now. Just know that the more accounts and the more trade lines you have that they are reporting to those business credit bureaus, and they're trackable, they were able to see them, you're able to monitor them and be able to see what kind of payments you're making from what issuers, revolving, installment, and more. And so it's very important that you guys build a thick enough of a business credit profile, because not just the 175 for this one, it applies for the other SBA loans with the 155, 140 more or less. And if you don't meet the FICO SBSS score assessment, your credit worthiness with business and personal credit, I have a lot of people who come to me all the time. I applied for an SBA loan. Great. Did you know what it actually took to get approved? No, but some company brought me. That's not a good answer. There are people out there who are secondary, third-party companies who are just going to pair you up with a lender, which is not necessarily a bad thing, but don't you want to go through somebody who can detail per detail, word per word, not bouncing his doing all that and trying to fumble something? And so I want you, and no offense to none of that, I'm just saying there's sometimes parts of that you got to be cautious about if somebody actually knows their stuff or not, or is this just really their nature or their communication. And I'm not the best communicator myself, so there you go. Now here, business credit, as I said, 175 FICO SBSS scores. Personal credit, I'll get into that in a second. I'll actually get into it right now, but you want to have 700 and above FICO. Experian, FICO scores, 700 plus Experian, normally what we're looking at, but a 700 threshold, and if anything were to change, you would be made well aware about. And so 700 and above is the starting point. With some of the other SBA loans, you normally see 675, 680. There's some we can do 650, 660. Yes, but ideally in this market, you might see advertised at 650 or 660, when in fact, we want at least a minimum of 675. And that's about 5 points above just doing creative credit-based financing on all three consumer credit bureaus at a 670 or 680. I'll get into that probably towards the end of this video. And so here, I went through that. Best for, here's what you can use the funding for: working capital only. I know for a lot of you too, I have debts, I need to refinance, I want to consolidate, I have all this personal debt, and I don't know, we can't work on personal debt, business debt. I do all this every day, guys, and I see it. And I'm very patient with people. I'm an observer. I don't speak more, I do more. It's just you see me here, and I want to get through this material, but I'm doing a lot of stuff behind the scenes. I'm getting a lot of things done. I'm getting things done, over $1 million right now, over 2 million, 3 million, anything underneath $1 million too, I do a lot of. I do everything from startups to the SBA loans, anything you can think about, putting your business together, making sure you get the personal credit right and the business credit right. And I'll leave resources in the bio and in the description for all that. And so here, best use for working capital only, so no debt refinance, not inventory. You could use this for growing and expanding your business. Perhaps you want to add some new carts, or you have a new property you want to get a lease on, and we can look at those a little bit. Now, when we get into the build-out, construction build-out, we got to look at that. That's a fine line. And sometimes an SBA loan lender won't look at that specifically on a business industry, and is also on the type of an SBA loan you're going after. Quick tips there. And then loan amount, 25 to around 150,000, as I mentioned earlier. Loan amount, this is very important. You get 30% of top line revenue up to 150,000. So it's not going to be the highest approval, as let's say you were trying to get a revenue-based situation that's unsecured financing, and this is still non-collateralized with this SBA loan. All the other ones collateralized, all the other ones profitability, all the other ones are cash flow. So this is an advantage for those of you who don't have proper cash flow sufficient enough. You don't have sufficient profitability. You could be reporting a loss, and you don't have the collateral coverage. So this is really cool. And so here, 30% top line revenue up to 150,000. You guys can do the math on that. I won't get into all this, but when you're looking at revenue-based financing, the difference is, and we can try to add this too on top of that. So a lot of people already come with cash advances, whether they're traditional merchant cash advances or hybrid cash advances / term loans. I work with those more, and those are generally less expensive. And these over here, based on credit card statements and a few things, we're encompassing all revenue coming into the business here. And that's a good place for many business owners, because their bank statements reflect in their revenue month to month over the last 90 days. They may be generating 100 to 200,000 per month, 200,000 and above, and they're looking for 300,000. Yet they're looking for one of these that can add. And so you have this on top of another option, gets you additional funding. And I'm going to get into how fast you can get more funding with these. But everybody has a place and everybody moves up. With me, you can rest assured you'll have that partnership. I spoke with the lady the other day, and she knows me so well now that I don't even have to bring this up. But she knows, Michael, you'll take care of me. Like, she doesn't have to say any more. I do all the heavy lifting myself with my team. And it's a testament of my being respectful, myself being humble, myself being accountable, responsible, very, very grateful and thankful of each and every day I get to live another day in this world. That's something you guys should be very grateful for, just being able to open up your eyes. And so here, funding time, and like I said, within days, it depends on the file, but normally within 2 weeks, 7 to 14 days, we can look at more or less. The repayment terms, like the other ones, around 10 years, amortized. Now, we're not going to include real estate again. This is for working capital purposes. And working capital generally tends to be a little bit more expensive, which I'll get into the prime rate plus the addition in a second. But 10 years amortized. Just imagine having 10 years of a term loan. Heck, forget the monthly repayment for the second. I get it. That's important, of course. But you get 10 years of terms and then low rates, which I'll get into in a second. But 10 years amortized up to 150,000 that you can get approved for, from 25 to 150,000 more or less. I know that may not be something that achieves your greatest goal or your greatest outcome, but it could be an addition. Or if it is, you're like, great, I have $55,000 amortized over 10 years. Now I get to sit back instead of working into my business. I put this money in and how I need it to. It's first. And then secondly, you could step outside and look at it from the outside in and literally take some time away, stress-free, hassle-free. Go on vacation, kick your feet up in the sand while you stare out into the horizon as the sunset comes down. And you just have no worry in your mind, no flesh, nothing like that, feeling like, you are feeling stressed about things happening. You're like, I have the money now sufficiently to run my business, working capital. I have emergency funds for the next 6 to 10 years that I can pull from. Like a lot of business owners who come to me, like those specifically in the trucking space, I'm going to come back to quite a few of them that could be eligible for something like this, where it's not a cash flow requirement, it's not a profitability issue, but in some cases we have to make sure if it's right and if it's right with the market. So them saying, hey, I needed emergency funds, but I've been over leveraged with everything. I can't get an SBA loan, standard loan up to this amount. I was really looking for this, but can we start off with a little bit? What would up to $150,000 do? You could put emergency funds set away. My return on my investment for using this money for growth and expansion would then do this. So you, as the business owner or owners, have to be very strategic and tactical about how you use these funds. I've done it for my businesses. Now, I don't trip up about those things. In the beginning, I was fumbling a little bit, trying to really specifically figure out my return on investment, but it didn't last long. I knew it right away, especially with what I was already doing. If there's pattern recognition in the business already, you just take more of what you're already doing and you amplify it. Yes, you can change, you can iterate. However much you change and what you iterate is up to you to decide. It's your business and what you're doing and what results you're generating. But too many business owners don't understand the math side of business, and I won't get into all that right now. That can be for another time. So let's continue forward here. 10 years amortized, which is great. No prepayment penalty. Awesome. Interest rate, Wall Street Journal prime rate. This is not an ARM. This is not a traditional mortgage. You're not getting up to 30 years or however much it is. You're not getting an idle loan up to 30 years. We're not refinancing, consolidating an idle loan underneath this one. You can't consolidate an idle loan anyways with this one or other SBA loans. It just doesn't work that way. Or you can't consolidate when you get this one with another. If you say you get this one, then later on you can then say I get one that's above 150,000 that I qualify for now, but those are going to look at profitability, cash flow, and a few other things, but you're not going to be able to usually you can't refinance or consolidate that underneath that one. It doesn't work that way unless you're doing other ones like a cash advance, lines of credit, bank loans, perhaps other types of bank loans, then we can consider it a little bit more on that end. That's not SBA related. And so here, prime rates generally, so they're the prime rate. I believe they're still 8% as I last checked. And when you see this video, it'll be different in time, adjusted quarterly. And so 8% plus 3.75%, I should say that. So quick math, simple, 11.75% is the standard basis. And again, that Wall Street Journal prime rate changes. You get in a little bit later. Now you're looking at plus 3.75. Let's say it's at 8.8%. Now that's a huge jump to say that'll happen sooner rather than later. But you're looking at above now. You're getting into the higher teens, lower teens, but then eventually higher teens. And so you don't want to wait off for this inflation and for this recession and everything we're going through. And so these are problems that people find themselves in, and it's okay. With 11.75% compared to, that's the question you should be asking yourself. Yeah, 11.75% isn't ideal, but compared to what? Compared to getting 15%, 20%, getting those merchant cash advances that I'm going to have a 1.45 factor rate, or you can say that's 45% interest, which it's not amortized that way. But you're looking at it and going, my factor rate here is 1.38. I'm going to get 50,000. I may get a little bit less with this if I'm getting the 30% top line revenue or whatever it is, the approval that we get you for. And we go, well, okay, I got, let's say for the example, 80,000, but I'm over here getting 30,000. Okay, well, I'll take 40,000 here and what I can get if I can get approved for that. And then I'll come back and get an additional amount if I needed to. Even if I got a short term or a long term, I'll pay it off fast. So you have to be strategic. If you don't understand your return on your investment, you don't understand these numbers on when you look at them on paper or you look at them on your Excel spreadsheet or whatever you're doing and saying, here's my invoices, here's what I'm doing, here's my expenses, here's my profit and loss. You guys should be looking at those quarterly P&Ls or 941s or whatever you guys need to look for, balance sheets, those P&L statements. Keep track of these things weekly, not bi-weekly, daily if you can. Whatever you see reporting at the end of the week, keep track of these things because it's a testament when people come to me and I don't want them, they've just vanished like Casper the Unfriendly Ghost or become Homer Simpson going back into the bushes. It's very sad to see. It shows a lack of character. It shows a lack of responsibility and accountability. You can think of it otherwise, but it's a lack of character. That's really what it is. And I've worked on my character for a long time to know these things. The thing that gets in the way is the person. And so I'll go back to that at the end here. Interest rates, as I said, adjusted quarterly because things fluctuate in the market. The prime rates shift, but not just the prime rates. We have to do a 90-day check, or normally that's what it is. and we see, okay, what's different about the market, what's appreciating, what's depreciating. There's quite a few instances, and there's more to make a case of. I'm not going to get into all the actual bulletin points on all that. But as I said earlier, no prepayment penalty based on gross revenue. So all these other ones, oh, well, those are based on exact cash flow and do I have enough? And then EBITDA, debt service coverage ratio numbers of 1.15 or 1.25 and above. And so you're saying with this, it's just based on meeting an annual gross revenue requirement. Yeah. So $150,000 is what we're looking at. I'll give you guys that right now. Fewer fees, perhaps around $1,000 or so. Very low. When you compare it to the other SBA loans where there's probably an upfront, there's a down payment included in that, then you have a good faith deposit if there is one of $500 to $5,000 or so for the term sheet, and then at post closing, then it could be added like $5,000 to $25,000 or so forth. It just depends on the situation. But here you see no prepayment penalties if you want to pay it early. I wanted to add that part next to it. Does not require profitability in your tax returns for all years. You are right. Each business can get up to 3 bolt loans in a 12-month period, resubmitted every 90 days. Now, that's an asterisk I want to put next to it because your situation varies from the next person. And if you're in a position where you already exceeded getting the most of 150,000 and you're waiting another 90 days to get more, it normally does not work in your favor that way for anybody. And so it's up to 150,000 usually max, like any other ones, up to 5 million in an SBA standard loan. Like I've helped out people get, they want to get more, they capped out. And so it's like, okay, for this business, this is what you can do. For that business, this is what you can do. And so they've exceeded 5 million in total. That really won't work. For this one, exceeding over 150,000 in total really won't work unless there's an adjustment to that. And we can look at it and bolt loans in a 12-month period that's resubmitted every 90 days. Cannot have 75K in revolving personal debt, but it's more so around 35,000. We don't want to see exceeding that number. That's more than enough. I need to say there. I can go deep into all this debt and stuff people accumulate on their personal one because at the end of the day, we have to make sure you can make the payments. It's like the same thing when I'm going to a collateralized lender and we're doing a commercial real estate situation and their minimum revenue requirement is 75,000 or the 85,000 and the minimum commercial real estate property value needs to be 125,000 or if we're looking at land, $1 million or something different in commercial real estate depending on that provider. But normally there's a basis on that. So these are things that we have to make sure that you guys can sufficiently service the debt and not have more than you're taking on. And you're taking on more and you can't make payments on. And it's 10 years. So if you can't make payments in 10 years, that's very suspect and very questionable. And you have to change your habits. It's probably your own personal spending, something with your business. There's things in that need to be addressed first, even before we even go through an application. Because if you're going to not have a plan for these things when they come up, you don't have an A, B, C, tier, D plan, you should have at least A through C in case anything were to happen. No franchises for this one. For the other SBA loans, yes. Use a higher tier service up to $350,000 and more for that up to $5 million. I'm doing a lot of franchise loans right now as we speak. If you guys ask me what's the most popular thing right now, and I see everything. Like I get people that come to me a lot and I'm very grateful and thankful for. I've built my personal and business brand enough and the reputation that I have. Be very careful again who you guys turn to in this space. Don't look at vanity metrics solely. And the one that I see the most of is acquisition loans. SBA acquisition loans or any kind of I want to buy a business. That's what people are jumping on right now. It's bigger than it's ever been. Well, because of it's also the industries. That has a lot to do with it. The market, the product market fit, people not wanting to start for their own personal and business reasons. They don't have, maybe want to look at seller financing and they get help from the owner. There's a lot of different reasons. Really, I can get into a lot of them. But here, as I said, no franchises, but no bankruptcy or foreclosures in the last 3 years, standard as what you see with other ones. You can even see that with some credit card or with creative credit-based financing where we don't want anything in the last 5 years. And there are a few exceptions to the case, but most people are not going to meet those. No current legal proceedings, minimum revenue, minimum credit, 700 plus Experian. Can be used for working capital only, as I said, or in other words, to gain working capital for whatever reasons those are. Requirements, I already went through those, 700 plus personal credit score, and 2 years time in business is what you want. That's ideal with all SBA loans. 2 years time in business. So if I didn't say this earlier, this is for non-startups. For startups, I'll jump on that really quickly in a second. But 175 FICO SPSS score, I said that earlier, business liquid credit. No down payment, as I said, no collateral is needed. So which is pretty cool. 150, and I can go deeper into like UCCs and all this stuff, but no down payment and no collateral needed. 150,000, like I said, in annual gross revenue. And there's a few other instances. Documents that will be needed, personal financial statements from the borrowers owning 20% or more ownership, usually is what's asked for. If not, we'll ask for one, but normally what we'll see. Application, I can send that out to you, and there's a structured way of getting this done. There's a process that I have with different lenders. And so many people ask me for the application. Sometimes I go, I got to submit this first to a lender. So him and I, or them and I, can review first. And then maybe I'll be able to send an application, or immediately I can send you an application and we can review, we can process it, we can get to the next part. Application, as I said, tax returns. Last 3 years of business tax returns normally is what will be asked for. A year-to-date profit and loss statement and balance sheets dated within the last 30 days, a current business debt schedule, last 3 years of personal tax returns on that side. For all owners with 20% plus ownership, personal financial statement, the SBA Form 413, in other words, that's what it is. I process those. I see them all the time. I get them submitted to me and my team frequently. But that's the standard, and I can go deeper into what if this, what if that, but I'm not going to start getting into all that right now. So right now, let me go back up to this. There's also the startup financing option. There's more than 150,000 if you qualify for that. Those do normally require a 675 plus FICO score, and they would have an assessment of 155 FICO SPSS. Normally, if you're a startup, though, you don't have to worry so much about business liquid credit. Your personal credit will weigh more heavily. And you need normally a 25 to 30% equity injection in most cases. And it's based on experience. So I don't want to go too deep into all of this. That's all I wanted to highlight. There's more options. I'll leave this for you guys in the bio as well as in the description. And now let me jump into the 0% interest. So the 0% interest is in the form of business credit cards where you can liquidate the cash out of these. We can add multiple on top of one another, take the cash out of these and use it for any investments, usually is the case. And there's a process to be able to do that. But I've been able to help plenty of people who have the right credit. Normally, you want to have 700 plus credit on all 3 consumer credit bureaus. Yes, we're using personal credit to get approved for business credit cards. How about EIN only? What about just stated income and all this? Well, this is already a true no-doc financing program. And this doesn't require those bank statements, those personal and business bank statements usually, the tax returns, etc. And so this is a cool thing to use and leverage, and normally 700 and above on all 3 consumer credit bureaus. They used to be 680 and above. I can go way deeper into all of this. I'm not going to start getting into all the qualifications and requirements only because I wanted to focus this video on this SBA Bolt loan. But there are many different SBA loan options available. You just have to be open enough to know what it takes, not just going to a site and seeing the marketing material or they don't give you enough, but you submitted information to find out more. But then still, it's like, no, it's not enough. They're baiting you in. They may not be bait and switching you, but they may then be bait and switching you. So be very cautious of that. And I see it so many times, and it's very, very tiring and taxing on the person. But yeah, that's where I want to end it. I hope you guys learned from this video, this new SBA Bolt loan. It's been around for just a little bit now. I like to call it fairly new, but it's a great addition to helping you seek financing and complete those projects that you have, using it for working capital purposes. If you have anything else that we need to factor into this, you might be able to qualify for a bigger SBA loan. And then if not, like I said in the beginning of this, what do? Creative credit-based financing we can work on without collateral. There's also cash flow, income, revenue-based financing, where we can look at bank statements. If we're trying to approve you for a certain amount above, we might ask for a tax return or tax returns, year-to-date profit and loss. If the lender does not waive that off, of course, sometimes they do waive it off. And then you have, I didn't say that, collateral. So you have the asset-backed, collateral-backed lending solutions, and that's become very frequent right now. And again, I'm seeing an uptick in, before I say that, Business credit is at the bottom here, installment, revolving. We can work on that. Separating your personal from your business, guys, is very instrumental. A lot of you just lead that or don't go through it here, or not mislead it. Sorry, I got an email from a client that I'm waiting for an answer from. One moment. This is very, very important. I don't mean to interrupt, but I'll get back to her. I just want to make sure I read this correctly. Got it. Nice. All right. So she gave me the answer that I needed. Her and I have a great relationship, and very nice lady. Like I said, I take care of you guys. I just got a goosebump because I can't put it into words, and I'm an introvert, so it's harder for me too, but I don't think anybody could. The kind of impact, and I get these shock waves that kind of just run down my body, and I like helping people so they can stimulate the economy. I like doing that through them, making sure that they help out our economy, help out their community, more importantly to begin with, and then have more of a global impact or have more of a nationwide impact. Put them on the map, help them out in more ways than just getting funding, and seeing them being able to service their own clients and saying, hey, I have emergency funds, now I have this working capital, or I have many ways to keep my business at least for the next 12 months. Thank you. And I just try to go out of my way and expect nothing in return. And this is just something that I've been, my introverted character, I guess, just a gift of mine, and I'm very observant of a person. So without going into all that, we ended up on the credit, cash flow, collateral. What I'm seeing right now, again, like I said, acquisition loans, but I'm also seeing plenty of startups, plenty of them, loads. And what I'm seeing problems with, and I'll kind of give you guys some tips here on what you guys can do. On the personal side, I'm seeing a lot of charged off accounts. I'm seeing a lot of recent bankruptcies. I'm seeing missed late payments. I'm seeing a lot of things that just shouldn't be appearing recently. And within 6 to 12 months, they have too many inquiries within the last 6 months. They've been searching and searching relentlessly. They've been trying to apply for different cards. And then when they come to me, and it's like, we can't work with you right now. We would have to do this. And I give people a game plan, and I go, this is where we need to begin. This is where we can end up. So with me, believe me, I'll help you guys. But please stay, I should say be, and stay loyal. When you find someone like myself, it's very hard. I'm not saying that to sound cocky, because I'm not cocky at all. But it's very hard to find someone in this space who won't overpromise and underdeliver, or won't help you. And who better to get it from somebody who runs multiple businesses, who is an entrepreneur, business owner, and very much is punctual and disciplined, and talks like this. I talk slowly, not because I'm slow, but because I listen more than I speak. And when people, you could tell people this, does Michael pause on calls? Yeah, I don't even know if he's still there. That's because I'm listening more than I speak. I'm asking the right questions, and I'm digging up the right information. And it doesn't have to take 20 to 30 minutes. It could take something within 5 to 10 minutes. And it's not always needed to be a phone call to start with, to initiate. Everybody goes, how can I get a phone call with you? There has to be a barrier to entry with all of this. And whether you have $1 million a month business or not, even with those people, I still have to. Because again, it could just be them just seeking information. I'm just another guy on their list. Which for most of the time, when people put me on their list, they know I'm the person that they normally want to turn to. But it's not enough for me to take that chance, even if they're like 50-50 split. Hey, Michael, I want to partner up and help you and help out other businesses. Or, yeah, talk is good. Talk is cheap. I want to see you take action. Don't tell me you want to do something anymore. Go and do it. Let me see you spread your wings. Do what you say you were going to do, because talk doesn't get you anywhere. Yeah, it can talk. You can talk yourself in and out of things. I was very open with a sales rep. I don't even like to use the word sales. I'm not in the whole. I like selling. I don't even like the word. And a lot of people use it in the wrong context. And it's not because something I didn't grow up with, and I had to learn them. And I went to school educationally. I was a Division I soccer player, sociology, and then I moved into chemistry and mathematics. And then I wanted to study more on chemical engineering, so I got into the chemistry, and then I got into the engineering side. And then eventually I saw the market, and I wanted to build a business, so I got into business administration. Not saying that was hard or anything. Kind of bored me a little bit, if I'm being honest. But here I moved in, and I started to learn quite a bit more. And then through real world experience, I got into the construction industry, manufacturing, and I worked on the field. I was actually working the machinery with the aerospace company I was with. I was the headerman pulling out the tooling from it. I was putting in the dies in, and I was taking out the tooling, and I was using grinders and tools to put some material together. But that was my younger 20s. I did warehousing, did a few other things. I was even a ramp agent at some time, and eventually getting into more of a financial logistics position, running data, spreadsheets, working my mind very, very hard. And I was also having to lift things. And with a huge contracting company servicing HP and Peace Health, I had to go back on unemployment benefits because the company got bought over. They had a downturn. And unfortunately, not by my doing, but 50 plus people were relieved. Even in HP, even the biggest people there were relieved that I used to speak with every single time. Like normally daily, we would run into one another. And these things happen. So I had to go back on unemployment benefits, food stamp cards, and it was just not a good feeling. Going into the grocery store, not being able to look at the person in the register, and just thank you, and then just walking away. And times I would, but I didn't want to, the whole EBT part. And I get it. We're all sometimes in a situation like that. Now I'm going on. Now, the thing is, you have to understand that the acquisition loans and collateral loans are what I'm seeing a lot of. Everybody's trying to get through the credit, trying to get through the cash flow, revenue based, but they maybe don't qualify, or they do, but they don't want it. They don't like it. Even if you don't like it, it's not all about the interest. It's about the benefit exceeding the repayment, and if you're over leveraged or not. And do you have the credit, cash flow, collateral? Do you have all three to then decide, hey, I got enough? Like a situation here, I had to ask to be reassured because they didn't tell me whether they did this or not. But they did a review on the 75K in sales that business owner is not producing. So doing an asset-backed lender specifically that I could have paired them up with wouldn't work. So their best situation is to give up the title and or we do a cash out refinance situation. And so it's very likely going to look like a cash out refinance situation. And I won't get into all specifics of that, but for those of you who have that kind of property that you can inject equity out of and a little bit more, there's more details to it. I don't want to bore you guys all right now with all the documents that are needed and so forth. But yeah, that's the situation. So I'm going to respond back to her and her team on this. And what I'm waiting for from the person is to have that real estate form resubmitted. And so once I see they have two properties, I'm going to need an individual form for each property filled out so myself and my team can then review. We'll do this very effectively. And so once it comes through, I'll take the time to evaluate it, analyze it, look even more thoroughly at the location because population matters when you're doing any kind of real estate financing. Location and population is really a huge thing. Has there been any recent bankruptcy in the area? What can we mortgage? What we can't? Fix and flips. Everybody's in a different situation. But I think that's where I want to end it. This video has gone far enough. Nobody has any questions. I'll leave it open for 30 more seconds. The replay should be up on YouTube, guys. I wanted to make it long enough, but not too long. So if you guys have anything, these next 30 seconds will be very valuable to you. And I see there are no comments or questions or anything like that. And this is more spontaneous. This is not something that I said I'm going to go live on. So it happens from time to time. Later on, usually around, the people who know when I go live on these are normally around 1 to 3. I try to be on here from 1 to 3. So once I'm done here, I have to go back and email quite a few clients. Some of them I had to tell them that they were declined and what they could and couldn't do. And then others who I'm waiting on, we did a review. I did them with my underwriter and my lender for certain clients I need to get back to on. Other ones that I'm waiting to get offers from. Others already have their offers that took them, or other ones that are just waiting on there. But see, it's a testament of character of how far you're willing to go. You may not realize it, but the character is what drives you. Would you stop at step 4 knowing you have step 5 and 6? It depends on what you're doing, but you should know as well, even before you get started with something, if you will be able to end it or not. And you just don't decide halfway in. It's like you're going to walk halfway to school to pick up your kid, or you're going to drive halfway to school to pick up your daughter or your son or whatever the situation is. And then you decided to, no, I'm going to turn around and I'm going to go home. What are the consequences of doing that? I can give you guys a whole list of them. But the ending point here is you wouldn't want to do something half, you know what? You want to make sure you see it through. Even if you go through the offer and you say, hey, I don't want it, just be communicative. Just quick email. Michael, I'm not interested. I know the way you said it and it makes sense and all, but, or whatever it is. Like, I won't pressure pet people at all. It's just, I hate people who are very like that. It's very bad. And I dislike people who are like that. And I don't know if those are people I would get along with on the personal, like, in my personal life. Yeah, to a point. But I can see that they're decommitted and they really don't follow through with things. And so trusting them to do something in that sense of taking action fully, is just and so every person is different. Again, I won't base it off just on that, of course, but character has something to do, and it plays a big factor when we go through the application process. It really does, guys. I can't tell you guys enough. I can't stress that out enough. So let me go to the comments one last time and I'll get going. And again, I work with anybody, even if you're stubborn, cocky, hard-headed, but what I tell people is, hey, you don't bring that garbage. You don't bring that garbage and attitude and effort to me, so now you're laying it on my shoulders in a very bad way. Now, if you've been overpromised and underdelivered, and I've been able to be given what you need to, or what you would need to be given, it doesn't always mean the funding, then I'm going to help you. But we leave this out the door. When you work with me, it's like you don't want to mistreat somebody. You don't want to mistreat your friend. And that's what you got in me. You got a friend in me. I'm starting to think about the Toy Story song. But you got a friend, and even more than that, a family member who's in your corner, who goes ringside. I may not be there right away, but hey, you got to fight. Rocky Balboa's got to fight in 6 months. I'll be there in your corner. I'll give you the water. I'll get you the towel. I'll do some of the scraping if I have to, but everybody has their job for that. But hey, let's get back into the ring. Now you have the right formula to defeat your opponent if you're doing a rematch or whatever it is. You're going for a rematch. Mike Tyson or whatever you're doing, you're in there, but you're in with that confidence and certainty this time that your odds, at least they improve. If you know that you're going to be able to win, this is another thing. Of course, you should always have that in mind, but your odds of improving this fight are immenseful. Now you take on that giant and you go, now I know how to maneuver. Now I know how to walk inside of the ring. Now I know how to shuffle my feet. Now I know when and where to have my hands at all times, not to overcommit, not to be too aggressive, but just to lay back a little bit, go in for a couple jabs, bring the right hook in, take a step back, and don't get heated about it. It's all a learning process when you're still in that ring. You think you may have learned everything, but you're still in there learning from that opponent. If they shifted things, if it's like, okay, they have the same habit, the same routine of coming back to this. Now I know after the first and second round or first round or even in whenever it is, you go, now I know how to approach that situation. So you are reading out your opponent way before you're striking. You're getting in distance with them. You're probably defending, waiting for them to be the aggressive one. And then you're reading their shot. So it's all about these little things that help you combat the difficulties when you're looking for financing in all aspects. Finances, operations, you have the product development, product outsourcing, you have the R&D team, you have the people that are exceptional at creating product, but those people that are not, that probably are great at marketing and selling it, or they are better at the operations, and that has a component of just a little bit of everything in some cases. And then you have the person in finance, whether it's you or somebody else, a combination of. But if you're not keeping track and score, who is? Even if you leave it in the hands of somebody, you got to do that and check in. Hey, I'm at the end of my week. Even if it's a Saturday, hey, I'm going to check I check my finances all the time. And so a lot of you are just, I don't want to know. I probably have $300 in my, that's why you're not looking or you don't care. I only have $300 in my, what should I care? See, that's the wrong attitude. That's somebody who was also telling me they may not be as resourceful. Or they are resourceful, but they got themselves in the situation where we got to get themselves out. We got to get them out of it. So there are a lot of things. Hi, Teddy. How are you doing? Yeah, it can, because we're looking at the most recent personal tax returns. People can tell me they have something from 2019 to try to verify income, but how many years have passed since then? So it's like we don't have the pay stubs, we don't have the W-2s. And again, I'm not trying to be that guy, everybody. Like I hate it. Like in the digital marketing agency is a different setup, affiliate marketing as well, because a lot of that is passive. Like I have that business built tip top shape where I actually spent many years, more than 4 or 5 years building that thing. And literally in the last, not even in a year, 11th month, 12th month, I made about 8 cents on a pain relief cream. And then from there, I knew what to do. And then it still had rocky roads. Yeah, well, rocky roads, you can say, or bumps. But anyways, yes, they want to be able to verify that income, stated income. I get it. Some people will even call people and go, they'll pressure them. Hey, I don't want to supply tax returns. And sometimes people fold just to earn their business. And that's not a good way to do things. You have to be careful. There are a lot of people who never, like, they don't get to me. It's their attitude and effort that's really getting in the way and hindering. I could tell when somebody is hard-headed. I can tell if somebody does their relationships, does their health align, does their wealth align? Do you have all three, two, one, none of them? And so it's like the opportunity cost, the cost trade-off. I can go on and on, but those are things that are very important. So again, the verifiable income, stated incomes, there's street shares, but even with street shares, they're going to ask for 3 months or 6 months of bank statements, personal statements to verify. Who's going to lend you, who's going to give you specifically a loan per se, but without verifying things like that. But the thing is, when you're looking at like true no-doc financing and you've been out of your job for that long, then we can look at the 0% interest business credit cards for 6 to 18 months. Since it's more of a true no-doc, bank statements, verifiable income in that way. We're basing it off solely on credit. And credit has to look clean, especially if you're at a 700 level on all 3 consumer credit bureaus. I had to decline somebody just recently. I'm actually looking at their email as we speak. But they were looking to get real estate property, and they're more new to the credit and lending industry. And I have wealth of experience in this, helping out a lot. Like literally, guys, when I say I've helped out multimillionaires and done all this stuff myself, it's a testament that I can help them very well. Some of them, they get funding. The other ones, they change their mind or they just don't qualify because of how they're depositing in their business. And that's such a shame. And a lot of these people, they disappear. Yeah, I'll respond back to you in 4 or 6 months. Great. And I have no like communication, or sometimes I'll just follow up from time to time, see how they are. They are. I don't want to know specifically always about their business. I want to know how they are. I want to know how you are doing. Literally, I care. And last night, I was going to say her name, but I was sending her an email. It was about 11:30. I kid you not. Closer to 12, 11:45. And she was emailing me, and I go, oh, there, she sent me an email this late. And I'm there on my computer in my living room, in my laptop. And I'm sitting on my couch. And as I'm sitting there, I have a blanket over me. I'm nice and cozy at this time. My laptop's on top, my arms out, my hands in front of me like this on top of the keyboard. And I'm reviewing some emails, and I'm getting something scheduled in for tomorrow, which is today. And to my left, just vacant, not occupied, and by a significant other or so forth, and or family members, and I'm just by there by myself, late at night, no TV on at this point, completely, a little bit of light. But I was just there typing away, and her email came through, and I responded back on what they wanted to do. And I told her just kind of a quick laugh, like, you'll be the last person I email today, and I have to get to bed. I'm very tired. And she responded back this morning, seeing if I was doing well. And those are the little things right there that mean it. And when they mean it, it takes things to another level. But it's for those of you who just are very like, can I get $5,000? Can I get $20,000? Hi is one part. Okay, I can let that pass. But normally, hi, how are you? Hi, how are you doing? Hi, Michael, I've seen your content. Hi, Michael, how are you doing? Hey, I've seen your content. Or hi, Michael, how are you? I've seen your content on YouTube, on blogs. I've seen them on social media. Oh, great. They even asked me how I'm doing. Whoa. Okay. Now that sounds like somebody I'm going to want to go far and beyond for. Even if you didn't do that, it's like, okay, I'm still going to work with this person. I want to see how their character really is. And I'm not going to test it entirely, but it's like, I see this stuff, even in an email. It doesn't have to be a phone call. It doesn't have to be anything else. It could be a direct message, etc. But I see these things all the time occur. Yes, and you can verify that income by pay stubs, W-2s. Normally, we want to verify by personal tax return. We normally ask for 2 years, 2 to 3 years, but we want to verify the most recent. And so, however you best see fit, but it might not be enough income. That's something maybe to be concerned about, and then spread out for a long enough time. So you can say I'm starting to report income, but it's only been for 2 to 3 months. Yeah, 2 to 3 months doesn't tell us quite a bit, does it? Doesn't tell us, okay, well, I have payments that I've been making for 4 to 5 years ago. 4 to 5 years ago, you've been making those credit card payments consistently. Well, how much have you been making payments in? Well, we might have to work the credit card route. We might have to do a secured personal credit card, secured business credit card. These happen all the time. People go into situations where they have bad credit, or they don't have bad credit, they have high credit, but they have bankruptcies for like all the stuff you wouldn't imagine. And then I recommend they do secured personal credit cards or business credit cards, and I go, here are the ones that I would look at doing. So I have to get going. I'm expecting somebody to help clean the gutters here, guys. Appreciate you guys. Thank you for tuning in today. I do have to get going right away. If I missed anybody, I do apologize. Thank you for tuning in. And in the description, bio, again, I have to go answer a door. I have to go do something else right now. But I will talk to you all soon. Take care. Appreciate you all. Information in the description in the bio. Take care.